My name is Cindy Murray. I'm from Frankfort, Kentucky. Yes, I have a twang and I am very proud of it. We'll just get that out of the way up front. I worked for state government for 33 years. I worked my way up from being I got my MBA when I was 24. And I got my first job with state government as a data entry operator and was darn glad to get it when I did. And then worked my way up until my most recent position was as Chief Financial Officer of the Cabinet for Health and Family Services. I was in charge of $13 billion. But my biggest stint was working with the Kentucky legislature. I handled the health and family services budget for them for 20 years. I can honestly say, no matter how much money is out there, there's never going to be enough to go around to take care of all the need that's out there in the state. So I retired from state government, and we've got a 19-year-old daughter who's a fourth-year pre-vet student at University of Kentucky. She's on her way to vet school. So me and Dad are going to be working for quite a while now. So when I got out, I put my resume out on Monster.com, and it came back and said that I would be best suited for either insurance or a CDL truck driver. So I went with the insurance, and I've been doing that for about 3 years now. And most recently, I am a call girl I'm doing Medicare sales over the phone with nonstop inbound calls wanting with help with their Medicare insurance plan. I'm licensed in 41 states. If you all are an insurance agency and you get one of your agents licensed in 41 states, be sure and tell them you've done that. Because they did not start getting calls from all over the country. I kept telling them, I can't help you. And so anyway, that's enough about me. Let's hear about Raul.
Thank you, Cindy. Well, I'm Raul Gallego. I'm the CEO of GCIF. As you can hear from my accent, I'm Mexican. And I hope that you can catch everything that I say, both for my English and also because I may have really different opinions because I come from a very different world than the U.S. insurance, as I discussed with Cindy some minutes before. Let me tell you a little what's GCIF, that is my company, and it's something that I'm really glad to share with you. We start with a problem in Latin America, and we have seen this in many presentations, as before with Whitney, that we don't have financial education. That's something that happens in Latin America, and I suppose that even more than in the US. We also don't trust in the financial institutions as clients because the relation has been tough, because the insurance companies has been, or the insurance or the financial companies has been profitable for many years, and the people are not always receiving the service, the experience, or the really product that they need. And also, we have something that in Latin America that is different from other regions, that we don't talk about money. I don't know if here it happens, but you never talk with your partner in Latin America about how much you earn, what do you want, how much was the dinner. Even in Mexico, the bill is really as something that just the parent receives at the table. And you never share. If you pay the bill, you never share if it was expensive. And all the expectations that we have in terms of our financial life or what we would like to have is based on what we saw in Instagram, in Facebook, because you are seeing the top 5 seconds of the life of all your friends. So you are always seeing something great of someone that is close to you. And when you compare that to your regular day, it's normal to have some pressure. So the families don't talk about how much it is. The friends don't talk if they pay their travels or their food with the credit card, or if they really have money to have these kind of things. So we created GCIF, that it's a platform where people can come to our app And they can use different tools that we have. For example, we have open banking, we have the credit score history of the clients for their whole life. We have coaching, video conference in the mobile phone with an expert that can talk about the life of our clients. And we have 400,000 clients in Mexico and in Colombia. And from them, we are learning what are the real needs in terms of their financial well-being. So if we saw that someone is really bad in debts, we don't offer them to start saving, because it doesn't make sense to start saving if you're paying your credit card or you are not paying your credit card. So for those clients, we have another solution that we go with the bank and we renegotiate the debt. And it's all about personalization. And we can see if a client has a car, so we can recommend a car insurance or have a credit on his car. So it's a really nice model. I'm really enjoying with my team to give financial well-being to all these in this new way, because there's not a relation of my product, my industry, my company. We are starting from the need of the client and really to being able to talk with them. So it's now maybe you will understand why some of my positions in this chat will be a little more concerned about the client needs than in the benefits for the insurance industry. But this is, as you see, we don't have a presentation. We want to make this more open and use all the knowledge that we have here in the room. So we'll be opening many times of this discussion to hear your opinions and to share your experience. We want to start talking about the definition of insurance and...
Yeah, when I first heard the subject we were going to carry, I thought, oh my gosh, I'm not an IT expert or anything. So I did do a little bit of research. Artificial intelligence is a technology which enables computer systems to accomplish tasks that typically requires a human's intelligent behavior. In the insurance industry, AI is transforming areas such as underwriting, customer service, claims, marketing, and fraud detection. Some insurance companies are using AI and machine learning to automate certain parts of the claims handling process and include customer service. Blockchain is being used to secure transactions, detect insurance fraud, prevent risk, and even potentially decrease the cost of a policy. The 4 artificial AI applications that are transforming the insurance industry include fraud detection and credit analysis, customer profiling and segmentation, product and policy design, underwriting, and claims assessment. And the only other thing I saw about AI is it is not meant to replace humans. It's meant to support and facilitate what we're trying to do, which ultimately is to help the client. And there also, you have to have a return on investment for it. You know, if there's not all businesses are have to be in business to generate a profit. So you have to watch, analyzes the pluses or minuses for whatever computer program that you're thinking about using. In state government, I will give one story about Kentucky was implementing a Benefund system, and which was supposed to be a one-stop shop for all the eligibles to get all of their benefits taken care of. They started off and it kicked 400,000 people off food stamps. I mean, you talk about a bunch of state employees scrambling. They had to set up a boot camp and have social workers come in and get all the backlog fixed and everything. So you also have to make sure that it's definitely going to work. So with that in mind, I thought we would just make this a little bit more informal. And we'd like to hear your all's input on what, your experiences with artificial intelligence and what's worked and what hasn't worked. And so, if we got anybody in the audience willing to stand up and speak on the topic, we'd love to hear from you.
So if you stand, there is a hand here. If you stand at the position of an
He's gonna bring
insurance
you a
industry,
mic.
it's clear that there are all benefits. But let's open the mic.
Alice McLaughlin, representing Nationwide Lending Group. I'm certified AI and blockchain, so I'm very familiar, and it's one of the best technologies and use cases in fintech and insurance. Now, we have very contrasting points of view here. Very traditional, and fintech, I'm on it. Okay, so by the way, I'm very involved with the fintech environment in your country of birth. So
Right.
we'll talk to it about it. But
Perfect.
what do you see is the next frontier for AI, right? Is it quantum computing? Is it getting into assessing personalities and matchmaking? What's this tailor-made policy? And perhaps, you know, through time, as we change as humans and our needs and wants change too, would that be dovetailing along with technology needs and product? And how pricing can be done in a systematic but friendly way so people can still be covered and have the benefits of it.
Yeah, well, what I see is there is a big amount of data, and the new data is coming in anything that we can, well, any way we can imagine. We will be able to know from the ADN all our future illness, so it will change the product so you are more saving to your illness than really protecting the risk. We have some products that really are charging you, for example, in the car industry by kilometer that you drive. So I think there will be all will translate in more products more designed for the personalization and for your particular needs. So that I think that will be a big change, because the traditional way is I will put enough clients in a box, in a policy, in an insurance product. So in average, they work as I expect. But with all this information, what we're seeing is that there are companies that say, but why do you pay your insurance car if you only use that car once per month? So that will really start making the fintechs or the insurtechs like taking out some of the clients that are very important for the big insurance, because an insurance industry works because there are people that don't really need the product but still pay it, and they in average pay for the people that really need it. And that. So I think that will create a split in the clients that have the good advice and they use the product that they really need. I don't know if Cindy, what do you think of the?
I think as far as artificial intelligence, I think if the way it's as fast as it's come on now, and it's really good that it is, if you don't jump on the bandwagon on it, then you're going to get left far behind as a company. So we've got to be on top of getting the best technology we can get out there, do everything we can to make sure that it's working correctly and doing its job. But we do have a segment of the population. I talk to a lot of people in their 85s, 90, 95, 99-year-old. They're still living by themselves out there. They are not going to touch a computer, period. But most of them have cell phones. So, you know, I think AI is definitely going to bring us out of the 20th century and just keep improving the services and being able to take care of our clients. That, to me, is the most important thing. You know, is get the people what they need.
Totally, because I think if you're in an insurance traditional company, it's not an option. You need to include all the information. You need to buy even some companies that start competing you, because if not, really slow, you will start losing the profitable clients, and just have this adverse selection that will really
lots of competition.
really hurt the problems. Also, if you have this if you have this advantage, you have this amount of client that you can start making the personalization within your ecosystem, leveraging all these agents that already know and are, that you want to complement, perfect.
So are you going to a model of shared services, democratization, within your vision as a CEO? Cindy, how you see that? Because you can see that as a threat or as totally contrary as an advantage.
Okay.
And I'm very curious because you come from a very institutional background. I also worked for the federal government in my career, so I echo to, you know, working for institutional, governmental, Fortune 500s of the world. Now I'm into the next frontiers, fintechs, and startups. So in the last 5 years of my career, I have made a jump leap that unless you get on it, it's uncomfortable time. So I'm very curious, like how your company views it, Cindy, and how a pioneer in LATAM is envisioning what I see, democratization and shared services.
You mean how the company views using?
How do you see shared services as is your teammate?
How do you feel that, for example, I have a relation direct with the client and not really as an advisor, or that there are two really different models. The traditional model to get this relation, you talking every day with thousands of people, well, with people about their business, and me sending SMS and push notifications, and a totally different way to relation with the client.
And not only that, to pay for what you really use. You know, we saw in COVID a very interesting phenomenon. I had no clue, but it was a girlfriend of mine that she was bootstrapping because she actually had started a new venture through COVID, and she's like, I have to save every penny I can. So she donned to call her insurance company and say, I'm working from home. I'm not driving. We can't drive. Like we're locked down. So they reduced their car insurance in half because technically, you know, the risk is less. So, you know, like this, she was really paying then something more fair. So that's part of shared services too, you know, democratization of the industry. What do you think about that, Cindy?
You mean, are you, okay, restate the question. Are you talking about being able to work from home or what?
Okay, what do you think about the model of pay for what you really need? And what do you think about direct to client, you know, direct to consumer approach?
Yeah, we need to get, I mean, definite big focus on fraud, waste, and abuse, and we need to cut down on that as much as we can. But it's always going to be an issue that has to be kept on forefront. That companies have to have like a dedicated staff doing nothing but watching fraud, waste, and abuse. So, but there's always, you know, in any insurance business you have, there's no way to totally get rid of that. You just do the best you can.
Yes, I think it's really important, that part, because before you gave 1 million policies, and well, in average, it doesn't happen if there are some frauds, because in average you know how, at the end, how much it costs to you, the claims. And, but with the personalization, I think before, when someone get to the board to propose, we will charge only for the kilometers, but how would you know how much is this? Or we will give you a better price in your car insurance if Waze says that you never go above the limit. Yes, but how you can the information from these new providers that I think Waze is still not a provider of this information, but it will be. He will know things about us. So when you propose a new product to a board, I used to work in ING, so I have some experience in the really traditional insurance company. I was business manager for the head of insurance of Americas in the Netherlands. And every time that a new disruptive product came, it was like, okay, but how can we measure this, or how we can follow, or we will need an army to really control these kind of things. And now it's different. We have seen in Latin America already some business models that before you buy your car, your car insurance, you just scan it with your cell phone, and then it's approved or not, or it's approved with a certain condition, and that reduces an amazing amount of work for the insurance. So I think that's why the artificial intelligence, to call it in a way, will really help to make more efficient the traditional companies, but also to really, if you have a particular situation, to find the product that you really need. The thing, for example, in KEEP, I have both. I'm selling traditional insurance products from really traditional companies, and with the traditional model, and we also including these new insurtechs that have a particular model for services, or for example, in Latin America, I'm not sure here in the US, but the insurance, the life insurance, it's recommended to everybody. If you are young, even if you don't have kids, if you don't have a family or no one depends on you, it's recommended to have a life insurance, because if you have an injury and you are disabled, you need to, that insurance will help you to have a better life. But at the end, what you need is a disability insurance. So there are companies understanding this kind of thing, so we're trying to make really take out the risk that people need. I don't know if there's another question. I see that you took the mic.
Yeah, thank you. What I hope I can do is help
rephrase
answering her question, and kind of share some observations and at least some perspective also. I think what she is asking is, and correct me if I'm wrong, you're looking at what AI's objective is. AI is supposed to inform and shape future behavior. It's supposed to be transformative in what it does. So AI informs transformative behavior. That's the intelligence that you use to then manage whatever potential opportunities there are. Her question was, there's a trend that is going to have a ripple effect on the insurance industry. And what she asked is, and I think you talked a little bit about that somewhere in your communication, what she said is, do you see a trend toward people owning less cars, less of these things, because the disruption is about, owning less of those things, which effectively translates into less insurance, the need for insurance, and all these other things. Am I stating it reasonably correctly? Okay. So my thing is this, and I'm living it right now with a very dear friend of mine who, he has shed his cars and basically, which eliminated the need for insurance, and that was his logic, eliminated the need for the risk of driving and so on. And so he uses Uber to go to wherever he wants to go. He's retired, so he goes to the golf course, he goes to, go wherever he goes to. It's kind of minimal. So now they don't have any cars. He lives in Atlanta. And so the question is that what you're observing to be the trend? Because it's going to inform how you deal with, how you market, who you target, and all those kinds of things. The same thing is happening, I think, in the last presentation. There was the argument about owning versus renting and things like that, and how different life cycle stages inform different behaviors. So that, I think, is part of what you were talking about, if not all of it.
Yeah, I talk to hundreds of clients every week, elderly, getting to the point, like you said, needing to, save on this to pay for that, and I've not talked to a single one that said, oh, I'm going to drop my car insurance so I could better pay for my health care. what you said definitely makes sense for them to do that. But getting them to those point, change is difficult. It really is. And some people are able to do it, and others they'll never be able to do the changing they need to do. So I don't know the answer to the issues we have out there right now in the insurance and healthcare industry. People are living longer, they're healthier, they're needing more services, and I'm the same as anybody else. When I have to go to the hospital, I don't want to have to pay anything on it. And I've helped with healthcare reform for over 30 years. I've worked with at least 6 different governors. It's just a very difficult topic, and I don't know if it'll ever be completely, solved, but, all we can do is try, and it may be, us as agents and us as business owners that have to help generate change and make the people feel safe when they do make the change, that their needs are going to be taken care of. But I think it is disturbing that I'm seeing a lot of elderly people out there in their homes. They're not able to get their medicines. They're having to choose between paying for medicine or buying food. And they don't have anybody to help take care of them. I talked to one lady who, she gets a whole $500 a month. Her insulin was $5,600 a month. I had another medicine, I don't even remember what it was, $143,000 a month. Now, I'd love to hear your all's opinions if you've got any ideas, of what we can do to make the changes, or what your experience has been, or, anybody wants to speak, it's fine.
Well, and from my side, only to answer what I'm seeing as this trend of people not owning their things. When I started in the financial industry 14 years ago, all the focus of the financial industries were, which is your goal? What do you want to own? And if you see it in the commercials, in the marketing, it's not that clear anymore. I think there are still some companies that they say, save for your car, save for your home, save. But I have seen as a trend as less people, less companies publishing this goal or dream way of thinking, and more thinking on what do you want to do. For example, I have seen a lot of insurance now on mobility, not on the car. So you insurance yourself if you are out of your house and you have any accident. If you are in your Uber, in your bicycle, you're insured as you need to move. And I think it's like in trends, they're really slow. So it's not that it's over. There's a lot of people that still want to own their home, and I think they should, and our advice to anyone is you should own a house if you have enough money, because it's really different to retire owning a home than without a place to stay. It's a general advice, but of course renting is really profitable. It could be cheaper at some certain points. So my answer for that is yes, I'm seeing a change in that, and I think it will continue. I think there is another question.
Yes.
Okay, go ahead.
Yes.
So I have something to share and also question at the end of it. I've been hearing what you're talking about, the AI taking over, like car insurance industry, etc. So there is a company, and I'm saying this from my personal experience. It's called Root Insurance. I don't know if you guys have heard of that name.
Root insurance?
Root.
Yep, definitely.
Yeah. They operate out of, it's a startup, and it's a smaller company, and it operates out of Columbus, Ohio. So my husband, well, I'm glad he's not here, not listening to this. He is not a very good driver, as in he gets into speeding tickets, and he had, when he was in his 20s, got into a few accidents, so the insurance really went higher on our car. We were, researching companies and people. How do we tend to buy insurances? Basically, looking at commercials, or, hearing about referrals from friends or family, right? So as we were researching, there's no company that could offer us good or a lower insurance than what we were paying for. And it just kept increasing based on the tickets and all. But how it works is you have to have it, they have it in the record for a certain number of years before it goes away. So although he didn't get any tickets for 3 years or gotten into accidents, the insurance was very high, the cost of it. So we heard of this company, and the way they worked is to have an app on the phone, and while you're driving, it has to be
Excellent.
on, and they would record the speed at which you're driving, everything, and the mileage and all of that, and that's how they'll reduce your cost based on your speed, how you're driving, if you're getting into any situation, adverse situation or not. So I think that's where the AI part comes into picture. But my question is, I guess for that company, they're taking a lot of risk, giving that kind of lower cost to people or drivers who are really risky. But I guess in finance, we say higher the risk, higher the return. So for these small companies or the startups, as far as the ROI is concerned, I mean, how do you relate or tie those things together as far as taking so much of risk and getting the ROI at the same time?
I think the big question would be if the tickets are a good indicator of the risk. The people that have more tickets more often, it's a better indicator than the information that you can get of the cell phone telling you how he drives, how often he really have a hard break. So I suppose that's a better indicator than the cell phone information. I actually have a friend who has an insurtech in Mexico with that kind of information, and he's really happy. I think he's not taking more risk. He's reading the risk in a different way that he thinks it's more precise, and sometimes he will also use the tickets. I suppose that if he has access to the ticket record, they will bring the both information and start comparing which one is better as soon as they have enough clients crashing, having accidents to see if, because it's maybe they have the same amount of crashes, but if you go slower in the car, but the accident is less expensive, I suppose that they have a model. And the good thing, and it's something that will benefit this, is that there are a lot of capital. The venture capitals are really open to invest this kind of new risk or new companies, new ways to do things. So it's also possible that they maybe don't lose more money or take more risk at the beginning, but with enough time they will learn how to take this risk.
But that is an excellent example of how AI is helping the insurance industry, because it's not just with Root. I sold property and casualty before too. All the insurance companies are using that. And my husband sitting right over there, he has the best driving record of anybody in our house, and he lets everybody know about that. The problem is, what do you do when you got a teenager who absolutely doesn't want to put the icon in their car so that they get tracked? So there's improvements that can be made on that as well. We
have time, and we have one more question. Yeah.
Okay.
I also want to say that I got a speeding ticket on my way to work today. I hope there's somebody here from Progressive.
Hello, I'm Karen Rands. So, there's a lot in the press and a lot you hear about ransomware and cybersecurity attacks. Wondering if you think or if you know that there is work being done to use artificial intelligence to assess the risks of companies being subject to that or being vulnerable to that, so that the insurance companies that are, insuring against that or paying those ransom attacks can do a better way of setting their rates and risk profile for those companies.
Mm-hmm.
I can only say that I think it's a big risk. For example, we have the information, personal information of 400,000 clients, and it's really important information. So, and we pay the insurance in Latin America. We have never had an attack, but it's something that you have to be really careful. I think you have to take it really serious to make all the information that you use to make algorithms in one place without the name of the client. So it has to be disciplined, it has to be many things, and I think that's what the insurance industry is trying to focus. Not really, well, understand your risk, so how valuable you are to someone trying to steal your information or breaking in your system, and understand your process, how do you split information, how do you take care of it, how seriously you take it, and in terms of that, it's I think, well done. It's a great business for the insurance industry because no one wants to go to bankruptcy because of one of these attacks.
Moreover, business continuity,
Yeah.
disaster recovery. By implementing that in some of my clients, I have not only helped them in their insurance quoting and ongoing, coverage, but also increased valuation. And it's something that is not spoken a lot, but it's extremely important.
Yeah, I was mostly concerned, because we had governments, local governments shut down, we had pipeline that created a crisis here.
Yep.
We've had local governments shut down because of it. It has had nothing to do with a hack that steals credit card information or personal information. It's shutting down the operations. The reason why they weren't moving oil through the pipelines was because they couldn't bill for it because of the cyber attack. But I think somebody could have assessed that and identified that as a risk, and either they paying huge premiums because they don't do the work they need to do to protect their operations. And so artificial intelligence, I think, it would be a good way for a non-person to be able to figure out what the vulnerabilities are when it comes to their software systems.
Yeah, I agree.
And I think that, they're developing AI more and more. They've actually come out with a computer company that is writing code for other companies, and it's totally automated. So to me, it's fascinating. I think there's still loads of room for improvement, and I think we've got a lot to look forward to as far as it having even more and more efficiency out there, so we can better serve our clients.
So my question is actually, do you guys see in the future insurance, and to some extent fintech companies as well, becoming more of an AI company? Or do you see the development of neural nets and everything being outsourced entirely? How do you see the future of that developing?
I see it being outsourced, continue outsourced as much as possible, until when and if that cost to outsourcing, costs more than what it would cost them to hire staff to do, whatever they're wanting to do. But he's an IT expert.
No, not really, but sorry, could you repeat the last part of the question because I didn't get it?
Yeah. So do you see insurtech companies becoming more of an AI company as the data flow increases in size and detail? Because kind of like the thing that comes to my mind is if you have an enormous pool of data and you can train models to be extremely accurate, doesn't it become more of an AI problem than any kind of insurance problem? Like you become essentially an AI company building nets to predict.
Totally, and I would say that all the insurance, I think the insurance industry has 20 years of advance of the rest of the financial institutions because they're really based their decisions for the last tens of years on really good data and really good information to make their products. The things that they used to use the average of these 1,000 or 1 million, or now the opportunity for the insurtechs are to take this small information and make more personalized products, take new kinds of unstructured information. So for sure, I think, for example, I don't have any product in my business, and I'm InsurTech because I distribute insurance products. But for me, my most important, my biggest team is analytics, and it's where we are investing the most. And so yes, I would consider myself I don't like to say artificial intelligence because you don't need to really have machine learning, or you don't really need the big technology to make it work. You just need to being able to structure the information, to have a discipline to analyze it. But for sure, if on top of that you are able to use this artificial intelligence to improve your processes, I think it's amazing. And the good thing is that it's available for the really big companies that can pay a lot, and also for the small companies, because you can get access to this kind of processes and information without a really big price. I don't know if we have time for one more, or I don't know if we have one more also.
No. But there's nobody here from Progressive, right? Good, I'm okay then.
Hi, my name is Ernesto Gonzalez, and I've been blessed with the opportunity to be able to be here in the United States. I'm from Texas, but I also grew up in Mexico City, so I understand, that it's totally, and Raul may agree on this, we have two very different cultures in Mexico and the United States, like completely different cultures, however, with very similar clients or consumers demanding quality and service. One of the biggest challenges that I've seen as I've been investing in Mexico is that it's got a cash culture versus in the United States, cash on hand, that's what I mean by cash on hand culture, versus the United States, which has, nobody carries cash anymore. You have a card, or you have your cell phone, or you have some new technology or crypto or something. I remember being in New York City about a year and a half ago, and before the pandemic, and I got stopped by a guy asking for money, and I said, sorry, I don't have any cash. And he said, don't worry about it, I take card. And he put the clip in his cell phone. And he went like that. I thought it was so funny. I did give him some money with my card. But in Mexico, you walk into some restaurants, and you have a big sign in the door that says cash only. So it's that different. It's very hard to measure the amount of wealth of people in Mexico because they don't believe in putting it in a bank, and they don't believe in paying taxes. It's just the way that it is. How does that affect AI and being able to obtain a substantial amount of reliable information in a country that has over 120 million people? If you cannot measure the amount of financial flexibility on the population, does that play any effect on artificial intelligence? I know that you're more dedicated on insurance, but or financial well-being, but how do you do that?
Yes, it's strange because in many countries in Europe that open banking is really advanced, and also I think in the US with Mint and with other companies, really taking all this information from the cards to understand the transactions and to help the client to that. We have that solution, but we had to add space where you can add everything that you receive in cash and pay in cash. And of course, nobody does all the information as we would love to. I think it's changing. I think all these neobanks, challenge banks, digital banks that are growing a lot in Latin America, for example, with Nubank, that it's now valued as a really big bank, even though they are still small in transaction and other things. I think it's changing. The other in La Condesa in Mexico City, someone came also with Clip, with an option to pay with the card the money that I also say I don't have money, but they also say, don't worry, I have this solution. So I think we're behind, that's clear. And I don't know if people really want to get on board on the digital things because of taxes and because of, we live in that way. It's a challenge. I think there are many ways to get information and to learn what the client needs. For example, in KIP we have the coaching that you don't need to give any real information. You can even lie whatever you want, and the coach will give you his best advice. To the other extreme, that is the open banking, seeing exactly how much do you spend in gas in your car, or how much do you spend in Netflix. You can see everything. You can learn everything about the client with their transaction. But I think what we need as an industry, as a financial industry, is to give them a reason to bring the information to us. So if you give a better price, for example, why would I have an app that tracks how I drive if it doesn't help me to improve the cost of my insurance and that thing? So I think we have to enjoy all the information that we have. We have more information than ever in our life, and really little with the amount, compared with the amount that we will have in the future. But still, there is a lot to do with this information. I think it really is difficult to manage the amount of information that we have now, so the challenge is big. So it's a problem, but nothing that scares us.
Great, thanks. So go ahead, Brian. Yeah, we're at time.
Thank you very much to all of us.
But if anybody
Really
knows
fun.
anyone on the Las Vegas police force that might be able to fix a ticket, if you could let me know, that would also be an option.
Thank you.
Thank you.